With that said, the next step of what we are going to do is passing it over to our amazing speaker, Param. I'm going to go ahead and bring her on in one moment. For anybody who does not know Param and you don't even understand the things that maybe Vanessa shared before, Param is actually a radiologist based out of Southern California who, while working full-time as as a radiologist and also raising two kids, has actually been able to build a multi-million-dollar real estate portfolio and also helped other people become financially independent and eventually quit her own full-time position just to focus on this on her own terms as well. So she's the founder and CEO of a company called Generational Wealth MD and also GW Capital, where she has helped over 20,000 physicians and professionals build their own financial freedom through her coaching program, Passive Real Estate Opportunities. She has over a decade worth of experience in doing this, actually. She primarily invests in long-term and also some short-term rentals as well, apartments, development projects in domestic here in the US, international. And in short, she has a lot of experience, right? Over 2,000 doors and $550 million in assets under management with her partners. So as you can tell, I don't say it lightly that we have a big hitter. So without further ado, can we please give a huge round of applause for our guest speaker, Miss Param? Let's go ahead and then I'll go ahead and ask to unmute as well. Let's give a round of applause. Thank you very much, Param, for being with us.
Hey guys, can you hear me okay?
We can hear you.
Awesome. Thank you for that introduction, Chris. So excited to see so many of you. I think this has been an amazing, amazing conference. I've learned so much. I'm actually super excited to go ahead and talk about a topic that I'm super passionate about. We've been talking a lot about leverage using AI. And I think one of the biggest ways to leverage what you're doing in real estate is to really tap into the tax efficiencies that the tax code offers us. And I'm going to talk about how you can do that and how you can use AI to supercharge it. Am I allowed to share a screen, Chris?
You should be all good.
Okay, and just a quick tech check. If you can just let me know that everyone can see me okay?
For sure. It's loading in still on my end. And I'll go
Is
ahead and
it?
I'll let you
Okay.
know. Yep, we see it all good now.
Oh, perfect. I am in a remote village in India. I travel quite a bit, and so internet can be an issue. So I'm glad we're doing okay.
Yep.
But that being said, super excited to talk to all of you about six-figure tax strategies. How many of you, if you guys can give me a thumbs up or drop in the chat, how many of you are actually paying multiple six figures in taxes every year, and you think that is a big pain point? How would you like to learn more about what you can do about that? I'd like to see. Give me a thumbs up or say me in the chat if you feel like, taxes are a big problem and that's something you'd like to learn about. I'd like to get some feedback here. But now that's been a big problem for a lot of the professionals, doctors, attorneys in our community. And before we dive in, just a quick disclaimer, guys, everything we're going to talk about today is completely is educational only. I am not a CPA, and so as you're making decisions, as you listen to this, personal finance is always very personal. So please make sure you're talking to your CPA, your attorney, and making sure that you're doing your own due diligence before you deep dive into any of these strategies. But that being said, I think something that we take for granted is, I think that there's also a quote that says the only things that are certain in life are death and taxes. And many of us feel the same way. But taxes are one of our biggest expenses, right? Many of us pay more on taxes than we pay on food, clothing, and shelter combined. Many of us are working 4 to 5 months a year for the government just to pay taxes. You think about that? That's massive. And we have a progressive tax system in our country. And so the more you work, the more you make, the more you pay, right? There's a progressive tax system. But there are many physicians, professionals, attorneys, tech people out there just like you who are doing something very, very different. And that's what we're going to talk about today, right? And just I want to show you some examples of what students within our community are doing. Many of them are paying $0 in taxes many years in a row, right? Some of them are sheltering close to $1 million of income from taxes. while they're generating close to $1 million in income from real estate, right? As they're scaling, and many of these people have been in real estate for many years. Like Richard over here was another physician who joined our community, joined our program, and he was for many years paying multiple six figures in taxes, even as a real estate investor who had a CPA, who he thought was real estate, was very savvy in terms of real estate. But there are so many mistakes. There are things that there are a lot of benefits that you can take as real estate investors that you probably, if you don't have someone advocating for you and you don't have a CPA who's really aggressive about some of these strategies, and aggressive in the sense, these are deductions that are afforded to you by the tax code. And if you aren't stepping in and actually taking these deductions, then you're losing out, right? You're losing out because if you pay taxes, you can't retroactively go and undo that. And so that's what we're going to talk about today. And we're going to talk about how you can use AI to leverage and supercharge your tax strategies. But for those of you, I think Chris did a great job about introducing me. Again, I'm a physician in Southern California. I became financial free at 41, use it through a six-figure cash flowing real estate portfolio. But a big part of what I did to supercharge my journey was getting to the point where I paid little to no taxes many years in a row because I was investing in real estate, because I was tapping into these tax strategies. Like Vanessa, I love educating. We've grown the community. Generational Wealth MD is about 20,000 professionals who are all looking to get to financial freedom using real estate. We've had multiple people go through our coaching program, and GW Capital is where we help our community invest passively in real estate. But all of that started from a place of pain, right? We've always heard us, you've probably heard this, the obstacle is the path, right? And so for me, that was in 2019, 2020, right before the pandemic, or my husband and I both lost, there was a merger at work, and as physicians, high income subspecialty, we still both lost our jobs at the same time because the terms didn't make sense for us. And then the pandemic hit, and I call that the breakdown in our journey. But what it really forced us to do was to really take a look at what we were doing at passive income, and take a look at, what we were saving after we paid multiple six figures in taxes. And we realized that there had to be a better way of doing things. That's when I went in, I started taking tax courses, asset protection courses, and I really started to scale my real estate portfolio. And before that, I was passive in real estate. I had a couple of rentals. But what that breakdown really forced me to do was take a closer look at what I was doing and learn to supercharge what I was doing so we could really get to financial freedom faster. So it was almost like taking the car off the track, rebuilding it and getting it to run faster than ever. And, I realized that there was a way to get to financial freedom much faster. And a big part of that right there. And for those of you who haven't seen me talk before, a lot of this is on the website, generationalwealthmd.com. There's an ebook where I talk about the strategies that I use, but we're going to just focus on the tax strategies. And you'll see that oftentimes there is a way to supercharge your returns from real estate where you're getting greater than 100% ROI in year one. Many of our students do this, and they do this by leveraging tax strategies. That itself can give you anywhere from 40 to 90% of your original investment in year one, right? And so when we talk about real estate, and when we're talking about using AI and leverage to scale, I want all of you to realize that there are a lot of levers you can pull as in terms of real estate returns, and your tax strategy is a big part of that, right? And that's something that you have absolute control over no matter what happens with the economy. A lot of those success stories that I showed you are people just like you tapping into these tax strategies in this environment, right? This is in this environment, even with all the uncertainty in the economy, people are like you are sheltering millions of dollars of income from taxes legally. And that's what we're going to talk about, right? And that's what really tapping into those strategies is what allowed me within a 12-month period to go from where we knew that we were maybe at about 25% of where we needed to be in terms of passive income to get it to the point where we actually got to financial freedom. And again, like I said, I did all of this while I was working full time and raising young kids. And so I strongly believe that this is something that all of us can tap into. And there is a path that's different from what the traditional path. Again, like I said, there are free resources that I share on the website where we talk about the actual numbers. And so if you want to take a look at it, please do. But today we're just going to focus on the tax part, right? There are many ways to supercharge your real estate journey, but I think what I want all of you to see is that if you're a passive investor, or if you're someone who's active in investing in short-term rentals, or you're qualifying for real estate professional status, and we'll talk a little bit about all of those advanced strategies, whatever you do, your income from real estate is very, very tax efficient, right? And so if you're thinking about, hey, how can I increase my income on the side? Adding real estate to the picture is very tax efficient, because when structured correctly, all real estate income, should be tax deferred. So essentially, your cash flow should be hitting your bank account tax free, right? There are multiple strategies we can use on the back end to reduce having to pay taxes on the gains that you've made, right? And so you're growing wealth like the wealthy do, and you're not growing. One of your goals should be to not grow active income that you get taxed on the most, but to grow wealth and earn better income, because rental real estate income, when structured correctly, can be tax-free because of depreciation, right? I want you to also, we're going to talk about how you can maximize deductions and credits, and that applies to all of you, right? Even if you're passive, you're investing in syndications, you're more active, you're capital raising, you're syndicators, right? All of us have the ability to maximize our deductions. There are ways to defer having to pay taxes, which is a really big part of supercharging your returns. And I always say this, if you're generating passive income from real estate, all passive income, any pig passive income generator, right, should have a PAL, which is a passive activity loss, right? Which is a very easy way for you, because most of us don't realize this. And I have students who come into our program all the time who come and say that they paid all cash for multiple properties, and that those properties are now generating positive passive income in addition to depreciation losses. And you're paying marginal taxes on all passive income that you generate, right? And so what I want you guys to learn at the end of this talk is to learn to generate passive income, but do it in a way where you're not paying taxes on that, right? And so what's the fun in growing passive income streams and paying taxes on it at your marginal tax bracket? Like, that doesn't make sense, right? And so the strategy is always to have passive activity losses to offset your passive income. Okay. Now, can you guys do me a favor and drop in the chat and let me know where you guys fit in over here, right? Because real estate is not a one size fits all. And I want you to tell me, give me a 1 if you are in the passive bucket. You're a passive investor. That's how you invest in real estate. Give me a 2 if you think you're a hustler. These are people. A passive investor is someone who owns long-term rentals, someone who invests passively in syndications. I know many of you on here, some of you are from our community, some of you are in that bucket. Some of you are hustlers, where you're doing rehabs, or you're doing midterm rentals, right? Or residential assisted living, anything that kind of really accelerates you to financial freedom. But I wouldn't call it completely, active or entrepreneurial. And give me a 3 in the chat if you consider yourself an entrepreneur. This is someone who invests in short-term rentals, or if you qualify as a real estate professional, right? If you have reps, you raise capital, you are a syndicator, then you're in bucket 3. So if you're in bucket 3, give me a 3 in the chat. I'd like to see where all of you fall. And I'm going to talk quickly about strategies that apply to all of you. Okay, so pay attention. Now, first, we'll talk about those of you who think you're a passive investor. So if you're investing in syndications, if you're investing in long-term rentals, and you're thinking, really, a lot of these tax strategies don't apply to me, I want to show you how tax efficient real estate can be, and why it's important for you to start thinking about maximizing your deductions and really tapping into AI to really audit proof yourself, get all those deductions in, track your expenses, because you really don't want to miss out on anything. Okay, so first example is Maria and Jor. They are also from Southern California. They were in our program. And what I like to say about them is that they are your typical passive investors, right? So they have business partners. They invest in long-term rentals and in syndications, right? And in some of these properties, even in this market, just based on how they acquire the property and how they negotiate, they're getting up to 18% cash flow. All of that is tax efficient because of depreciation, right? They're building ADUs. And so even as a passive investor, there are ways for you to be super, you can really bump up your ROI. But let's look at the tax piece for that, right? Now, if you're a passive investor, I want to show you an example of how tax efficient real estate can be, right? And so this is a property I purchased in 2014 for $150,000. In 2020, it had gone up in value to $220,000. Now, I had about $40,000 in cash flow from this property right? And I'll take this and you can apply scale to this at any point, right? But this property gave me $40,000 in tax-free cash flow over that time, right? And that's because of depreciation. But your equity in the property is increasing because of debt pay down, because your tenant is paying down your mortgage. Your equity in the property is also increasing because of market appreciation. And at this time, right, over the course of 6 years, I was able to pull out. My initial investment was only $40,000 in this property, but I got the same amount tax free, right? And I was also able to pull out the same over $60,000 tax free by doing a cash out refinance, right? So just goes to show you that even as a passive investor, there are a lot of tax efficiencies in real estate. And so I always say this. Sometimes our students will come and say, well, I'm passive. I don't get to use the deductions against my W-2 income or my 1099 income. So I don't really, do I really need to maximize my deductions? And the answer is yes. You always have to maximize your deductions because you carry forward any losses you have, right? And you can always use it in future years. So as real estate investors, this is something that all of you should be tracking. This is something all of you should be maximizing. And there's AI can really help you in tracking this appropriately. You can actually connect your AI agents to QuickBooks and track all of your expenses connected to your Excel sheets, right? And so there are deductions in real estate that are related to your property, and there are deductions related to you as a business owner. And I want you to maximize all of that. Some of you are purchasing courses. Those can be tax deductible, right? You can buy a business vehicle that weighs over 6,000 pounds. A lot of our students do this, and you can write it off completely in year one. So this could be a Tesla Model X, I think it's a Q7, a Beamer X5. Some of these qualify for these tax deductions if you use them primarily in real estate, right? Or in any business that you're in. And so you can get those deductions when you travel to your property. Those are deductions you want to make sure you're tapping into. You can pay dependent kids and parents for working in your business. A lot of our students, they have their children who are assisting them in their business, and they pay them into their Roth IRA. I do this with my kids, and then you are getting a tax deduction on that on that income. They are never paying taxes on it, and it's growing tax free, right? So this can be super powerful, and these are the kind of things. This is how you need to think out of the box as you're thinking about building generational wealth, right? And like I said, if you have passive income, any source of passive income, right? You need to have passive activity losses. And so sometimes how this works is if you have other businesses that you're generating passive income from, investing in syndications can give you passive losses that you can use to offset the taxes you're paying on that income. If you're invested in short-term rentals, like a lot of our students are, and you combine that with syndications, because in year two, your short-term rental is generating massive passive income, you can use syndications to combine those losses so that in a sense, you're becoming very tax efficient, right? So always remember, pigs need to have pals. That's something we talk about a lot. And that's something that a lot of people miss unless you actually go and track it. So you need to be tracking this. Talk to your CPA if you've already done your taxes. For those of you thinking passive, this is a free resource that we share. It's a guide that allows you to go and do your own due diligence. And so it's a great resource for those of you who are thinking, how do I go and learn to vet passive opportunities at gwcapital.com/guide. That's a great resource for you. And that's a gift. That's a labor of love. If you're starting out, it's a great quick read, but it really helps empower you. Now, let's go into some of the more exciting stuff, right? This is where we talk about, okay, how are people paying $0 in taxes when they're making millions of dollars of income, right? How can someone shelter your income, earned income, from other areas where you're generating income from taxes? So I'll show you examples. So this is an example of, two physicians. They own their own practice. They have young kids, but by investing in short-term rentals and by investing in a medical office building, they were able to shelter in 1 year close to $1 million of income from taxes, and I'll show you how. Okay, and so with short-term rentals, this is one of the most exciting things, right, about the tax code. With short-term rentals, because they're considered a business, you could invest $100,000 into a short-term rental and get close to $300,000 in tax losses in that year that you can use against your W-2 or 1099 income, right? So that's a 3x multiple, and by meeting something called material participation. realization, right? By spending a certain amount of time on that property and showing the IRS that you're active in the property. Now, this is very easy to hit. We have a lot of people with no real estate experience at all who come in to the program, and within 3 months they own a short-term rental and they're qualifying for this tax benefit. But just to give you an example, she acquired a property for $500,000, where for a short-term rental that she ran with her father, which was a dream for her, right? And she was able to get $150,000 tax loss in that year from that property. Now, this property only requires you can do a 10% down loan on the property, so you can put as little as $50,000 down to get the 150K in tax savings, right? So that's 3x multiple. And that's a very, very smart way to use leverage and to use real estate to get these tax losses. Now, you can do this with medical office buildings, and that's how they were able to get an $800,000 tax loss. But you could also do the same thing with short-term rentals, and you can do it. I'll show you another example of someone who did this without investing in short-term rentals, by investing in apartment complexes. And this is what I do at this point, where you can use these tax losses when you qualify as a real estate professional. You still can use all the tax losses you have in that calendar year from real estate against your earned income, right? This is how many real estate investors like you are able to pay $0 in taxes while growing their portfolio. And that's a super powerful way to supercharge your wealth strategy, right? So tax strategy is a big part of your wealth strategy. Just to give you some other examples, a short-term rental that I purchased, where I was able to, I actually have a better example of a short-term rental where I put in $100,000. I got $250,000 in tax losses from that property in 1 year. And in addition to that, the property was generating income, higher cash flow, and also appreciating in value over time. And I forced appreciation with the rehab. Many, many things you can do, but adding the tax piece to it really supercharges it. Example of another, power physician couple, Vanessa and David. Vanessa was a stay-at-home mom, also a radiologist, but she was a stay-at-home mom. And so she decided to go, after she joined the program, to go buy multifamily. They got, I believe they acquired about 28 doors in that 3-4 month period. And that allowed them to shelter close to $500,000 of David's income from taxes. But that's because she qualified as a real estate professional. The criteria, the amount of time you spend on your portfolio there is more than you would with a short-term rental, but it allows you to invest in multifamily, midterm rentals, long-term rentals, triple net commercial buildings, and still get those tax losses, right, which can be super powerful, right? This is the example of the property I was talking about, where I invested, put down $100,000, rehabbed the property, did a cash out refinance, pulled out tax-free $100,000 from the property at the end of that, but also got $250,000 in tax losses that I was able to use against my W-2 income, which was almost the entire down payment coming back to me as a tax refund, right? So very, very powerful. You can do this with smaller properties. Whenever you start out, we've had students who bought, Aaron, they purchased a property which is under $400,000, less than $40,000 down payment, but they got $120,000 tax loss, which was $52,000 returned in refunds, right? So that's more than what they put down. And that's something that you can use. So you're recycling the same pot of money over and over again. I think that's the beauty of tapping into these tax strategies. Dr. Kumar is one of our short-term rental coaches within the program. She manages 10 short-term rentals, and we always talk about scaling her multifamily portfolio, but it's really, really hard when you have your systems built out, and you're tapping into the tax strategies to shift strategies, right? And so again, the power of, and from her portfolio, cash flow from her portfolio exceeds her clinical income, and she's tapping into these massive tax strategies, right? And so that's what I want you to see. I want to show you how AI can change the game. AI can really, you can build agents using Claude Cowork, and I know you've done a lot of that work with Vanessa over the last few days, and connect it to QuickBooks online, so it can track your expenses. It can, figure out if you're expensing things correctly, expensing versus depreciating, classifying something as a repair versus improvement, partial asset disposition. There are so many ways where if your CPA is not savvy or if you're not bringing something to them, you can miss out on multiple thousands of dollars of tax losses that you can use against W-2 income at any point, right? If you're active, you're passive, whatever that is, right? So deduction discovery is a big part of how AI can help. Tax strategy simulation, compliance, both from the perspective of bookkeeping, but also maintaining logs for any of you thinking of those advanced tax strategies, right? These are all places where AI can help once you start syncing it up with your QuickBooks Online, with your calendars, with Excel sheets, right, with your Drive. And so for any of you doing this, with all the knowledge you've gotten over the last few days, consider connecting Cloud Cowork or Manus with your with QuickBooks Online or wherever your Stessa, wherever you're saving your data. I don't know if Stessa is connectable. QuickBooks Online is. And then let AI do the analysis and really guide you. And you should use it as a guide as you provide this information to your CPA, right? And so just examples of how you can instead of doing a lot of this manually and instead of having supporting documents that are lacking, that are where you're not audit proofing yourself, but you're missing out on a lot of deductions, you're able to really maximize those deductions and track more efficiently and spend less time on doing all of this, right? That's what we're trying to do. When I talk about tax savings, when I talk about cash flow from real estate, and all of you over here, you realize that what we're trying to do here is not the financial gain, right? It's the emotional gain. It's buying back our time, right? And that's where AI comes in. That's where real estate comes in, right? Buying back our time and getting to financial freedom, not in our 60s, but much earlier. And I'm hoping that what you've heard has intrigued you, and it makes you think about how you can optimize taxes and how you can use AI to really help you do that in a more efficient manner. And that's all I have, guys. I'm more than happy to take some questions if we need to. But back to you, Chris.
Oh, oh my God, how are you? How are you, Param? Thank you so much for being here. Thank you so much. Please, everybody, give Param a round of applause. I don't have the drums sound here, but give Param a round of applause. Thank you so much. And I didn't know that you know so much about AI. I love it. I love it. Okay. Do you guys have any questions for Param? Do you guys have any questions? This is your time. I do have a question for you, Param. I know that you're in India. Thank you so much for joining. It must be so late for you. I'm making the time. Team, are you able to unmute, Param? I need someone to unmute you, Param. You're muted.
I got it. I got it. I'm so sorry. I thought I was done and I muted myself out of habit. But thank you for your patience. How are you doing, Vanessa? This was awesome. I just love the content so much. So powerful.
Thank you. I love it. I love it. Thank you for joining too. And I know that you're in India. So what time it is for you?
Well, it's a half hour past midnight.
Oh, wow. Wow. Well, that's amazing. Thank you so much for joining. And I think that we have a question. Do you have time for one question, Param?
Yeah, absolutely. Sorry, my next meeting, I'm just letting them know I'm running a little late. So we should be good. Yeah.
Okay, so we have one. Well, we have a few questions. Let me see. How can you do this with a property that you already own? Can you sell it to another company, or can that be actually done?
So you don't need to sell it to another company. There are ways where if you own a short-term rental or a long-term rental or multifamily, it's all about timing, right? And so you could have owned it for 5 years, but if you want to use the tax savings, as long as you haven't bonus depreciated, and most likely you haven't, right? As long as you're hitting material participation for a short-term rental in this calendar year, you can bonus depreciate it, right? And there are many, many ways to do this. You can group your multiple properties. There are many ways to do this. So you don't have to do it in the year of acquisition, if that's the question. And same thing with multifamily and long-term rentals. Same thing. If you qualify for real estate professional status and material participation in a given calendar year, that's the year you want to go. So a big part of this is timing, and getting the timing right in terms of tax strategy, and hopefully work with your CPA to make sure you get this right. Or, if you're in communities like this is a great space to ask and get mentorship and guidance. But yes, it doesn't have to be in the year of acquisition. You just have to time it strategically.
I do have a question for you. I know that if you're a real estate professional, Param, you need to spend 750 hours, okay, doing this
Yes.
in order to offset the W-2. Is that correct?
Yeah, so it's 750 hours in real estate and more time than in any other income producing activity. So we have doctors who spend 1,000 hours in medicine. They have to spend 1,001 hours in real estate, right? So that's one piece of it. That's to qualify as a real estate professional. But you also have to materially participate in your personal portfolio. For most of us, if you're not an agent or a property manager, then it's very easy because the 750 hours you're already spending about 500 on your personal portfolio, but you have to be intentional about both of those criteria.
Don't you think, what do you think is going to happen now with AI? Because what I see is that people that is using AI is just, they don't need to spend 750 hours on something that they were spending 750 hours before. So my own opinion on that is that the law at some point it has to change, because you don't need to spend that much time anymore. What do you think about that?
I agree. I mean, things are shifting. It probably takes a while for the tax code to change. But that being said, most of us, Vanessa, you and I know, when you are a real estate professional, we go to conferences, we educate ourselves, we are mentoring, and we're having conversations with brokers. And so I think the way we work in real estate will change, but most of us will likely be spending at least 15 hours in real estate in a week, when that's what the average, that's what is expected. So I think we may lose a lot of the cut work and be focusing on more, high-end tasks. But I still think till there are any material changes to the tax code, I think hitting 15 hours a week for people who are pretty active is not hard, because we walk properties and you have due diligence conversations, and so the way you get the work done will absolutely shift. But it's very important to track those hours and be intentional, right? Especially if you have a property manager, you want to track their hours and your hours and make sure you hit it. And so maybe you need to make a few more visits to your property and be more hands-on in that sense. But yes, things will shift. Things are shifting. But there is, at this time, that is that requirement, and I think we can get creative about it.
And now the good thing about that, Param, is that AI is going to give us actually what we need with the same amount of time to 10x our business, because we don't need
Absolutely.
to do anything. So now
Because you're 10xing. Yeah,
you can
absolutely.
so easily. So excited to see you here, Param, that you're using AI.
Oh.
Well, we do have a gift from Param that we're gonna email everybody, because I don't have it here in front of me. We either email or we will send it to you in the VIP in the room as soon as we get it. But Param is giving us a guide. Param, do you want to talk about that? A guide for?
Yeah, that's the passive investor guide. And I was just telling people, even if you're a passive in real estate, it's very, very tax efficient. And I think a big thing over there is really knowing what kind of opportunities you're going into, learning to do your own due diligence. And yes, AI can help, but I think it's always great to have your criteria. So you're giving it your criteria. And so you have to build your buy box first and feed that to AI and feed that in your prompt. So it knows what your buy box is. And that's going to be very different from someone else's based on what your other sources of passive income are, where you are in your wealth building journey. And so it kind of helps you build your own buy box and get very clear on your criteria, so you can give it to AI and then allow it to kind of to do the rest of the due diligence for you. So
100%. That's what we're doing here, Param. Thank you so much. I love seeing
absolutely.
you here. Okay. And
Nice seeing you again, Vanessa.
round of
Take
applause
care.
for Param. Round of applause
Bye,
for
guys.
Param. A heart.